Welcome back to this week's episode of the Lady Landlords podcast. At the end of every year, I really just like to share a little bit of a recap of that previous year. And then I would love to be able to share my predictions of what I see happening in the real estate market for 2023. I did this last year. I'm going to share what happened with my predictions, what that looked like for 2022, and then we'll talk about what we can really expect for in the new year. So, last year, I shared three different bullets of what I thought the real estate market would show us in 2022. As a reminder, if you did not catch that episode, we talked about how one, I thought that rents would continue to stay at an all-time high, that two, that housing prices would pretty much kind of stay the same. And then three, we dove into what expectations would look like for the short-term rental market. So let's break down really what that looked like. First off, we talked about rents staying at a high rate. This was something that I thought was going to happen just because of the housing prices that were still just so high. It really was putting people in a lot of position where they just were not able to go out and be able to buy a property. In 2022, clearly people were much more back at work than they had been before. They were able to kind of get past any type of layoffs that they were experiencing during the pandemic in 2020 and maybe even early 2021, but they were going back to work. A lot of people ended up either in debt, they had other costs, they ended up moving, whatever that may be, that really put them in a position where a lot of people were not able to become homeowners as they had necessarily expected. That then meant more people were staying renting property. More people renting property means that there's a higher demand. It's probably going to end up being less supply, which means that prices really went up. And I think we saw that in 2022. Personally, one of the duplexes that I actually bought here in Orange County, New York, I could not believe the amount of people that were applying to the property and coming to that open house purely because of how difficult it was to be able to find housing, even at these incredibly high prices. I had absolutely priced that unit at market rent, and just the amount of people that were reaching out, and not only just reaching out and applying. That happens. I'm here in New York. I buy in very popular areas in close to the city in metropolitan New York. But this was different just because so many people were actually like begging, like sending me letters to try to have me pick them over other tenants. I actually had somebody that bought me baked goods. I felt like I was being bribed. And it was really just because the prices had just been so inflated with rents that it really was making it very difficult for people to um, to find properties. But rents increasing was definitely something that we saw here in 2022. The next point that I thought that we were gonna see in 2022 is I really didn't think that housing prices were gonna change too much. A lot of people felt going into 2022 that prices were gonna come down, that they were clearly at an all-time high. And my prediction last year actually was that they were pretty much gonna stay the same. We weren't really gonna see a drastic drop in prices, but I did say that the one thing that I thought we would see would be a lot of that competition, overbidding, the bidding wars, the waiving contingencies, all that. I felt that we weren't going to see that as much. I felt like we were going to see properties staying on the market a little bit longer than they were just kind of going overnight as we saw in 2021. And I think for the most part, we did see that. I think there are very few places that were now in Q3, Q4 of 2022 starting to see a little bit of a price adjustment. But for the most part, I do think housing prices are still really at an all-time high. And we also see that with what is happening with inflation and now the changes in interest rates. For anybody that's tried getting a mortgage over these past few months, it's clearly quite a bit more expensive to be able to borrow money. The cost of money and loans is just more expensive right now. And because the feds have been raising those rates and impacting mortgage rates, that is actually what is pushing down a lot of those housing prices. Still have not seen too much of an adjustment there. I think it really kind of depends on where exactly you are. If you start to see some of those changes a little bit more. Over here in New York, we're not really seeing many changes. I know a lot more of the urban, larger cities, same thing, they're not really seeing that. But we are starting to see a shift within within where people are kind of moving again. And I'll talk about that when I get into my predictions for next year. Lastly, I actually went really back and forth about my predictions for short-term rentals in 2022. The reason for that is because originally so many people in 2021 were buying up the short-term rentals. We're going through that market. There were so many people, especially with 2020 and the pandemic, that were really staying on these staycations. It made great sense for a short-term rental. People weren't really traveling very far from their homes. People were very happy to have their own space, didn't really want to be in a hotel. But at the end of 2021, when I made my predictions for this year, we then all of a sudden had that huge influx of the Omicron variant. And I know personally now I'm still thinking about last year, Christmas morning, I was standing outside in New York winter, freezing, waiting online to be able to get my COVID test, not only for family with Christmas Day, but then also I usually travel around the holidays as well. And there were just so many other people that were sick. And I think that when we saw that influx of in cases within COVID once again, I did change my prediction and say, hey, I felt that the short-term rental market in some places was very oversaturated. But now and people really want to get out and travel. People were looking forward to being able to go to other countries again. And with the Omicron variant, I said that I really actually thought that people were probably going to stay a little bit closer to home until that calmed down. So we couldn't really decide what was going to happen with that until we got into Q1 of 2022. And what I guess was kind of a good part of that was that that variant really kind of just came and went. And we were really able to kind of move forward. We didn't end up in that same lockdown position as we did clearly back in 2020. So I do think that that really helped the short-term market for the beginning of the year. So that was really what I felt like we saw within 2022. Very interesting changes. Our economy just then also threw a couple other curveballs that that really didn't kind of go into some of those predictions for this year. I think one of the biggest things that we're looking at right now that came out of 2022 from an economic standpoint really is inflation. Costs of goods have just absolutely skyrocketed from what you're buying at the grocery store to what you're buying right now for holiday presents, for even services and other things that you really just need to spend money on. The cost of everything is absolutely going up. With those costs going up and that inflation, one other thing that I feel like we're seeing right now in Q4 of 2022 is a lot of layoffs across the board in so many industries. There are so many places where people really are having to make cuts. I feel like that really kind of came from a lot of that great resignation, right? 2020 happened. A lot of people were laid off. A lot of people switched jobs, maybe went back to school, decided that was an opportunity to start a business, whatever that may have looked like. But a lot of people also, within then moving into 2021, decided that they wanted to switch jobs. They liked the idea of working from home. They had moved during the pandemic and they really wanted to be in a place, they wanted to stay where they were. They didn't want to go back to an office. They didn't want to have that commute. Maybe they didn't want to move back to another state where they were originally working. So many people not only resigned, but then they were in a position where there were so many job openings at that time that it was really a great market to find a new job, and they took salaries at higher rates. And unfortunately, I think that's kind of coming back and hurting us a little bit right now. A lot of companies had this huge influx because they had to go on this hiring spree and they brought in all these new people, but they brought in all these new people at much higher rates than before. And I think a lot of businesses, unfortunately, just really were not able to support that, coupled with the inflation that we are facing just really across the board for everything that we're spending money on right now. And I think that's really contributed to a lot of layoffs. So we now have inflation just for general goods that are just costing everybody more. We have a lot of people that have lost work, that are out of jobs due to those layoffs. And we also have rising interest rates over this past year that have just really sped up, especially in Q3 and Q4. So here are my predictions of what I think we're going to see now in 2023. First one, I do think we're going to continue to see these high rents that we've been seeing for the past year. If you already own rental property, or if you're looking to buy a rental property, your rents are going to be at all-time highs. Um, I think we're going to continue to see that because of the inflation and the layoffs. One, a lot of people are not going to be able to move. So there's going to be less supply of available apartments for people to kind of move and change places for. But you're also going to continue to have a lot of people that are not going to be able to buy a house. With these high interest rates, it's going to price them out of what that market looks like. With losing jobs, with that job insecurity, with inflation, where everything else is costing them money, buying a house is really going to be out of reach for your typical home buyer. So those people are going to have to stay renting. Since they're staying renting, it's going to be the same thing we saw here in 2022. More renters, higher demand, less supply. That's going to have prices go up. So I do think we're going to continue to see high rental prices. That is something that we need to watch. I do think that there will be a couple places around the country that probably won't see such an increase in that. And those are going to be places that maybe people move thinking that they would be able to work there in the long term, that just all of a sudden are areas of this migration that we saw in the past 2 years, that a lot of people say, hey, you know what, this was fun for a year or two. It was great to be quarantined here out in the country and have some extra space. But you know what? I want to go back to my city. I do think we might see that in some places, but in general, I think rental prices are going to continue to increase from where they are now. Next up, elephant in the room that we're all thinking about, interest rates. What are going to happen with those? Well, one of the ways that the federal government can actually kind of get a little bit of a handle on the inflation that's happening is to kind of slow this growth, slow purchasing in different sectors, and really increasing that interest rate has been a way that they've done that. And if you've looked over over 2022, the way that the federal government has increased interest rates has just been faster than really, and in larger increases than really we've seen in such a long time. And that's really just the best reaction to how we can slow inflation down. I think we're probably going to continue to see that a little bit. I think still in Q1, Q2 of 2023, I think we have to be still concerned about rising interest rates and how that's going to affect mortgage rates. But hopefully by Q3, maybe Q4, really, I'm thinking the end of 2023, we might see that balancing out a little bit. I am not expecting dramatic drops in interest rates. Personally, I don't expect to ever really kind of see those twos and threes that some of us were able to get in 2020, maybe ever again, if not probably a good 10, 15 years. But I do think that we will start to kind of level off with interest rates, hopefully by the end of this year. And then maybe in 2024, start to see a little bit of a decrease. That'll be next year's video when I give you my predictions then for 2024. But I really don't think we're going to see much of a difference within mortgage rates over 2023. I think these rates are really kind of here to stay. And listen, that's okay. All because interest rates are high does not mean we do not have to buy property. We just now have to buy property differently. Okay. In any market, there's still the opportunity to go out there and find deals, and to find deals no matter really where you're buying. But we just have to really be able to evaluate a market differently. And we have to be able to really know our numbers and be able to do that deal analysis for what the numbers are showing us, but also what we are looking to get out of purchasing rental properties. So with that increase in interest rates, the whole point of kind of increasing those interest rates is really to kind of lower what those sale prices are. So I do think that we are going to start to see a little bit of a price decrease in some places. Probably, once again, a little more of your higher cost of living areas where there's a little bit more competition. I do think we will start to see sale prices decrease ever so slightly, but that's going to make a difference. The reason for that is when you think about it, not us as investors. Put your hat on, though, as a couple with a family that's trying to buy their forever home, right? They're buying that house, and that's really where they know that they want to be, and that's going to be their primary residence, and they plan on being there for a long time. Those people really have a certain amount of money that they are able to spend for their cost of living. So, for example, someone might say, great, I have, based on my income, I can spend $3,000 a month on what my mortgage is going to look like. The typical home buyer, once again, not investors, but the home buyers know that that's their fee. There's not going to be much of a discernment between how much of that $3,000 is going towards the equity of the property versus how much is going to that interest rate. What they kind of need to know is just it stays within their budget. It doesn't matter if $1,000 is going to interest and $2,000 is going to the actual property, or if it's 1,500 split even. It really is just something that as a regular homeowner is just going to say, hey, listen, I got 3 grand. It doesn't really matter what that split looks like. That's really just what I have. So by increasing these interest rates, and since that's costing more to be able to then buy those properties, the only way that people and most people who are primary home buyers are going to be able to continue to afford houses is really if sale prices do decrease. We have to get people within their budgets of what they're looking for. So I do expect housing prices in general to come down ever so slightly. Um, there probably will also be some interesting buying opportunities for those that did balloon rates, that had variable rates, that all of a sudden that fixed rate that they had or that low starter rate that they were working with for maybe a HELOC or a various or another type of line of credit, all of a sudden, if it goes to that variable rate, remember those rates have all of a sudden absolutely increased so quickly and so dramatically that is going to really um, put people in a difficult position if they have that variable rate and did not account for how high costs have now gone. So there might be an opportunity where people will have to sell, where people will have to liquidate what some of their assets are. This clearly is not something that we want to see because this means that other people are hurting and are not in a good financial position. But I do think that we will shift a little bit more into that buyer's market because of these constraints of what lending options have been for the past couple of years. Lastly, let's go back to short-term rentals. Short-term rentals, I do still feel that a lot has been, especially with eviction moratorium in 2020 and 2021, staycations, a lot of people have went the short-term rental route. And honestly, not everybody is knows or wants to be really running those short-term rentals. So I do feel that there is a bit of oversaturation in certain markets with those short-term rentals. And I think that's going to do two things. One, I do think that there are going to be certain municipalities that are going to increase what their legislation is on Airbnbs, meaning that certain areas are going to say, hey, listen, there's just too many short-term rentals in this area. People really can't actually live here anymore. So therefore, they're either going to have people have to register with a city or town, maybe have to pay an annual fee to be a short-term rental operator, or they're going to ban them and make it where you need to be more of a 30-day stay. We've seen this a lot in areas down even in Florida, Georgia, where now you cannot do stays that are less than 30 days. This has been something rather common in New York City, where I am, even before the pandemic, um, that we were not able to do short-term rentals here in the city. But I do think we're going to start to see that in a lot of other places and a little bit more, not just in those cities, but a lot more of these staycation destination type locations. So in the short-term rental business, we do have to make sure that we are following legislation because we want to make sure to stay compliant with what that looks like. The other thing that I feel like we're seeing right now is over 2022, Airbnb has actually changed quite a few of their policies. And I do think we will see more of that in 2023. Once again, this is nothing wrong with having a short-term rental or not saying it's not a great direction to be able to go. But just like the rising interest rates and mortgage rates, we need to see what is happening within this market and we need to learn how to pivot and we need to work on how it's going to affect our business and make sure that we can stay profitable. There are clearly other short-term platforms out there, but Airbnb, it's almost become its own verb and how we use it. And this is something that we do have to consider is the largest platform out there. And when they change how their platform works, that is something that we have to kind of pay attention to within the short-term rental market because it has such a direct impact on our actual business. So, for example, one of the changes that Airbnb had actually made earlier this year, I think it was back in February or March, I think it was March, was that if a person had rented an Airbnb and there was a problem with that location, or if it was considered false advertising, somebody could not stay in that location, that Airbnb would actually move that renter to a new location and a cost would be incurred by the original host. That makes a huge issue when you're running business with what does that customer service look like? And also you're taking the responsibility out of your hands to fix that problem and really allowing Airbnb to be kind of that third party judge. And that's going to have a direct impact on your cost of running that Airbnb. One of the other changes that was just announced here in Q4 of 2022 from Airbnb was they're actually changing how their pricing will look. For example, if you've ever gone to Airbnb, you know, when you kind of look at that map view of, great, I'm going to go stay in Charlotte, let me go find a great place. You look at that map and you're like, great, there's a place to stay here. It's $100 a night. Here it's $150 a night. Here it's $75 a night. And that really is what entices somebody to look more at your listing. One of the changes that's coming with Airbnb is they're going to change that to include what all of those fees actually are. I think a lot of us have done this on Airbnb where you're like, great, I'm going to take that place for that $75 a night. Then all of a sudden, when you go to actually book it, you now realize, well, but now you have a cleaning fee and you have a stay fee and you have this fee and this fee. And now all of a sudden, you thought you were picking a place that had that cheaper nightly rent. But when you add in all those extra fees that a host might add on, now all of a sudden you're actually more expensive than maybe that $150 a night place. So what Airbnb is looking to do is make their pricing more transparent upfront. So it's going to change what that map looks like. So now you're really going to have to look at what your pricing looks like as a marketing and presentation perspective to still entice people to look at your listing compared to in some places, thousands of other listings in this oversaturated short-term rental market if you happen to be in one of those markets. So I'm definitely interested to see not only what's going to be coming from Airbnb in probably Q2 of 2023, but also what legislation is going to continue to look like, especially as we're going to have a shortage on long-term housing due to the fact that rents are going to be increasing because there's going to be more demand because people are going to be buying less houses for their primary residences. So it's going to be very interesting to see how this plays out. But those are my predictions for 2023. I look forward to seeing what's going to happen with them, and I will report back and we'll talk about what the accuracy of those are. Tune in. I'll be coming out with a episode at the beginning of the year to kick off season 3 of the Lady Landlords podcast with what my personal goals are, what I am going to be looking to purchase, invest in, and where. So please do make sure if you have not subscribed to the Lady Landlords podcast, wherever it is you are listening to us, whether if it is on podcast or you can always also watch us on YouTube on the Lady Landlords podcast channel. But those are my predictions. I look forward to investing and growing with all of you in 2023. If you are stuck and do need help learning how to grow your portfolio or buying rental properties in this ever-changing market, do feel free to consider the Lady Landlords mentorship program. You can learn more about it at lady-landlords.com. Thank you so much, and we'll see you all in 2023.